One of the questions I was asked to answer today was what's hot and what's not? Well, today almost everything is hot. Overall, prices are very high. And actually, some, when you look at them, are incredibly high compared to both not just last year, but to historical levels. And when you look particularly at steel products and products going into steel supply chains, we've seen some really, really high prices. This is looking at the growth from January 2020 right through to now. And the sort of second question that I was asked to look at was, do we think that this sort of level will continue? And I think we can say when you've got prices rising at the rate that they have done for some of these commodities, that these you can't really sustain these level of price growth. And in fact, we're already entering a period of quite significant price volatility. Longer term, we certainly see, we'd expect to see prices more closely linked to this sort of marginal cost of supply. When you look at demand for different product areas, we take a positive view going forward. Generally speaking, demand's recovering through to our sort of forecast period through to 2025. Fairly steady recovery. There's some products that are a little bit stronger than that, and one which is lithium, which is literally off the chart. One of the burning topics at the moment is definitely China and China's sort of 5-year plan. There's been a fair amount of talk about this dual circulation policy and how that fits and the impact that'll have on some metals and metals demand. Really what we're talking about here is a rebalancing away from sort of heavy infrastructure development and construction towards more consumption goods. Again, trying to move away from being the sort of cheap source of goods to being a more focusing on higher value products and higher technology products. So again, perhaps here a focus on less on the sort of steel and lower grade commodities and more into to goods in higher tech areas. That also fits with stated government policy towards carbon reduction in the environment. So they're looking for lower energy intensity GDP growth. And we're already seeing that this year in some of the government's policies towards energy consumption and production of a number of goods. So you mentioned load shedding earlier on. The Chinese government has restricted electricity availability to certain sectors. Does that regularly anyway, but would be more so this year. And has also directed certain industries to produce less. So steel would be an example of that. More sort of positively, there are some upsides still to be built in some of the regional forecasts. The American jobs plan has some really quite commodity intensive and metals intensive sectors. Some of those will be in sort of more infrastructure and construction type projects. So you're looking at rail, transit, roads and bridges, and the airports. Some will feed into higher tech areas and broadband and the power grid. And then we also have something feeding into electric vehicles as well, and everything, the infrastructure that's needed to support that. We'll see the whole package not signed off yet, and also not reflected fully in our forecasts. But we're looking at this as a very positive move for metals and commodities. Electric vehicle growth, this will drive some changes. We're forecasting some significant growth in the share of electric vehicles and hybrids through to 2025. When you look at the growth that's coming from, or the share of demand growth coming from electric vehicles in some of these commodity areas, it's really significant. And that's what takes lithium from a laggard in one of the first charts that I put on to being off the chart in one of the later ones. Beyond 2025, I think we're anticipating a sharper pickup in electric vehicle growth, and that goes on through the 2030s, depending on what country you're in. Another hot topic at the moment, again, which will have an impact in a number of areas, is carbon emissions. And when we talk to our clients in the mining and metal sectors, carbon emissions is the number one ESG topic. The driver behind some of this is coming from our clients' customers, who are increasingly asking about the greenness of the products they buy and CO2 through that. It's coming from regulators looking at carbon border taxes and how that might work. And it's also coming from people who finance projects and shareholders as well, who want to know how companies they're investing in sit on relative to other people in the industry. The issues that steel are facing are the type of issues and responses that metals and mining companies will face globally. So you can see in Europe there's a real push to decarbonise the steel industry, but it's not just the steel industry. There's pressure across the board. You can see a more supportive policy towards CO2 reduction in the States following the election of Biden. And even in China, we're beginning to see some fairly strong action. So anticipate that this will be a big issue and a big hot topic for companies going forward.